Hello, everyone. I'm John Furrier here in the CUBE studios in Palo Alto with Dave Vellante. Dave, salute to you.
Hello, John.
Johnny boy, Davey boy. I guess someone said, hey, Johnny boy, good job
I just saw you
today.
in New York this week. You're in Palo Alto. I'm back in Boston. What do you know?
Someone commented on LinkedIn. They said, good job, Johnny boy. I think that came from Dave Vellante. I think you're the only one that says that here in the pod. But episode 110, what a week. I mean, the headlines are awesome. We've got so much to go on in the AI world. But we were just in New York for our crypto Trailblazers ongoing series. This has taken off, this series. Brian Bauman, NYSE Wired, theCUBE community. This is going to turn into, I think, a ongoing podcast series, because the demand for the content, the demand for crypto, millions of people are interested in crypto, not only at a fundamental tech level, but just overall the impact of their lives. But the IPO market's booming. Bullish went public. We were there. I put out a tweet, a LinkedIn post, posted on SiliconANGLE of the opening bell. I'll see the biggest IPO, bigger than Circle, bigger than Figment in terms of the pop from opening price. I think right now it's trading, I just checked, at 69.5 roughly. So it's normalized, still up from the 30s where it priced. Super, fever in the IPO market. You have all these unicorns in the corral waiting to be unleashed onto the market. The demand for IPOs in private markets, as we've been commentating, is fantastic. And these aren't AI companies. This is, you got Figma, you got these crypto companies. It's not the AI craze. They're not yet ready to go public. They will. So this could be a very good, healthy sign for the market, Dave. So amazing action on the public markets, amazing tech scene. It's a fever pitch. Perplexity put out what I call the publicity stunt, saying they want to buy the Chrome browser for $34 billion, bigger than their last valuation. Now they got Brave browser talking to them. So the browser wars are here, right? I mean, you're starting to see, the AI generation refreshing everything that we once knew to be consumer, everything we once know to be enterprise. Total transformations coming with AI and the browser. Again, just another data point of what will be transformed in all aspects of digital life. Crypto speaks to the digital currency, certainly with Bitcoin. Ethereum points to the programmable side of it. We covered it for 2 days. I mean, we just had a great lineup. Chainlink, Talos, Binance Finance Labs, Ether Machine, just an amazing lineup of experts coming in. We had Open Ledger, Anchorage, Han Ventures, just people who are in the business on crypto, seeing their businesses doing very well, and the IPO demand for crypto, just again, a signal that if this is strong for the crypto, the IPO market, if it doesn't, bubble doesn't pop and those gains are realized, it's going to be pretty massive, massive.
So, and we covered the Bullish IPO, which was pretty amazing. I mean, that thing rocketed. I was surprised. I didn't think it would do that well. I mean, I thought it would do well, but I didn't think it would do that well. I mean, they jumped to they're over a $10 billion valuation now.
Yeah, trading at 69.5 right now. Bullish IPO. We covered that in depth. I mean, I got that wrong. I didn't think it was going to be as big as Figma. I think we did an emergency pod kind of on that IPO, unpacking the Bullish IPO. If you check on our feed, I kind of didn't think it was going to pop, Dave. I was like, maybe their numbers aren't as good as, say, Figma. I'm high on Canva going public, as you know. I've been really kind of saying that's going to be a bigger one than Figma, kind of in the same category of relevance. But Bullish jumped out of the gate. Circle, and with stable coins, their market cap is more than the stable coins that they have in value. It's like, so it's kind of like you're starting to see froth. So the question will be, where's that dip going to come from? Is the dip for Bullish 69, right? Is it going to be lower? It's going to be very interesting to see how big that pops. So, I mean, what's your take? You got, this transformation currency system. You got programmable money with Ether. You got Perplexity. Basically saying, hey, Google Chrome browser, we'll buy you for $34 billion.
Well, I think it's on the IPO front with Bullish. I think it's a confluence of three factors. One is obviously the regulatory climate has gone from Gary Gensler, no crypto for you, to David Sachs and the Trump administration of, come on in, we want to be the world's leading destination for crypto innovation. So that's one. Two is, I think the ICO craze of 2017 and 2000, mid to late last decade, middle last decade, created a lot of funding and a lot of innovation that is now starting to hit the market. And I think three is there's just such a pent up demand for IPOs, and those three things hit and have hit. And the New York Stock Exchange has become the place for crypto action. And there's just a lot of momentum right now. And in the Perplexity thing, Sam Altman said, I'll leave this meeting right now if that's going to happen. I mean, it's a nice publicity stunt. I mean, Google's not going to give up Chrome without a fight.
Yeah, but now Brave is at the table. So like, again, it is kind of a publicity stunt. They don't even have the valuation of 34 billion, but it sets the tone. It's a shot across the bow. Call it a publicity stunt. It totally worked. Genius move by Perplexity. They're punching up, and that's a punch up move, as they say. Startups punch up to the leaders. They're essentially saying we want to reinvent the experience of users, and by getting a first-party browser, why wouldn't you say that? I mean, it's all upside. There's no downside for Perplexity, and certainly the capital markets will rush to the gates and say, "Hey, take our cash, fund us." So I think the need to raise money is a serious deal for them to kind of have to remove the doubts that it's a joke. But I don't think it's a joke per se. I think there's an undertone of, hey, if we could do it, why not test the market? So, I think that's a key notable thing. The other news that was really top of mind this week, and just putting my notes here together from this week, besides the crypto, we'll come back and do a deep dive on, but the Intel Trump roller coaster, right? Trump called up for this resignation of Lip-Bhutan, okay? Fired, then praised. Now there's a government stake involved. Okay, went from you should be terminated to go hat in hand to Trump. You got AMD and Nvidia paying a 15% AI chip export revenue to China. Rob Hope calls it the gangster policy angle. Shakedown. There's implications. I saw Applied Materials said fourth quarter was not going to be up to expectations, but their long view is unchanged. That was news today. So the impact of the semiconductor sovereignty play, which we've been talking about, if you follow this pod and are listening and watching, we've been documenting that. Dave, you've been laying out the business case for a government thing with Intel. I mean, we rehash this every time. It's almost.
I have some thoughts, Johnny boy.
I mean, Dave, I'd love to get your thoughts. I mean, the government taking an investment position in Intel. That is essentially your proposal. So with a little bit of a twist, but that's essentially the direction we were going down with our analysis of Intel, and then your pro forma that you did on the cap table and how this could be pulled off. It's almost playing out as we laid it out, and as you laid it out specifically on why, the rationale. Just look at the implications of the semiconductor industry. You got weirdness going on with NVIDIA, this 15%. It's not going to change, and Trump's going to go meeting with Putin today. So this is he's shaking. Everything's up in the air, and when it comes down, where it lands, no one knows. But this is the thesis that the U.S. is saying, let's save Intel. Is this a bailout like they did with GM in the auto industry? That's what some speculate. I'm saying, maybe there's a little bit more sovereignty here, a little more upside potential. Give us your take on the Intel Trump roller coaster and the second order effects and the implications to the NVIDIAs, the AMDs, and the semis. It's a huge, complicated 3D chess match.
So this is the topic of my breaking analysis this week, decoding Trump's Intel pivot. And
Intel what?
Decoding Trump's Intel pivot. So he went from last week to Lip-Bhutan should be fired to, hey, let's invest in this company. This guy's amazing. Okay. So, and of course, I'm listening to Andrew Ross Sorkin and Joe Kernan debate this morning. And, Ross Sorkin, I think he does a good job. He's like, he obviously takes the angle of, well, wait a minute, do we want this, government owning, this company and setting, picking winners and et cetera. And of course, Kernan was on the other side of it, just like, yeah, how come you can't ever be positive? And so that was kind of funny. But putting aside the sort of the politics of it all, one of the analysts came on, and I agreed with him. This is essential. Of course, His point was, this is like the nuclear arms race in the 40s, not the race, but the nuclear, the first atom bomb in the 40s. We had to be first, and this is as important. What everybody though misses, what CNBC misses, what the analysts who come on miss, is that if you don't spin out foundry, this is a failed model. You have to spin out foundry, and they really weren't talking much about that.
Yeah.
Why would the U.S. government even consider investing in Intel? It's not because they're going to make a bunch of dough. It's because they're trying to secure a U.S. domiciled manufacturer of advanced semiconductors. And just putting TSM factories here in Arizona or wherever in the United States doesn't do that. If China takes over Taiwan, which I think should be the base case, then that puts everything at risk. And so you have to have, in my view, it's essential to have a U.S.-based, U.S. domiciled, U.S. headquartered manufacturing facility for advanced or ownership of advanced semiconductor facilities. So how do you do that? Well, so so they're missing that. They're also missing the fact, and why they're missing that is because they don't understand Wright's law. Kathy Wood came on CNBC about a month ago, and she's like, we have a detailed research methodology based on Wright's law. And they just like glossed over it. They just went on, and they didn't even ask, like, what's Wright's law? As we said many times, Wright's law is one of the determining factors in manufacturing costs. If you can as you double your cumulative volume, your costs go down by some kind of constant percentage. Critical in the semiconductor business. Why? Because to go from just to build a fab takes 3 or 4 years. And then once you build the fab, you got to put equipment in it. That takes another at least 1 to 2 years. So now you're, let's call it 5 years in. And then you got to get to yields that are acceptable. So you're talking another 1 to 2 years. So you're talking the better part of a decade just to go from breaking ground to actually having a product that you can sell. And number one. Number two, when you switch processes from whatever, 7 nanometer to 5 nanometer to 2 nanometer, whatever it is, your costs go up. The cost to manufacture the first one is more expensive than the previous line until you get to that volume. So as we've explained many, many times, this is why TSM is so far ahead of Intel and why Intel Foundry is in a death spiral, because its costs have gone from 15% higher, several years ago. Now they're about 30 to 35% higher. And it takes Intel a year longer to get a product through the whole process that I just described. So you can't catch up. The only way you can catch up is if you have unlimited capacity or unlimited cash and unlimited time and patience to bomb pricing, lose money for a long, long time so you can gain market share, get on the learning curve, which is essentially what Wright's law is, and then compete for volume so that you can at least become a viable second source to TSM. So all of that is a long-winded way of saying, Trump's idea, if it's true, is not necessarily crazy, notwithstanding the politics of U.S. government owning shares in a company, but it's got to have certain conditions, including spinning out foundry and a new cap table, which we laid out in detail. So I'll kind of stop there and get your take on my initial spiel.
Well, I think the implications for the semiconductor industry with government intervention is what a lot of people have been chatting about. That's my concern. You point out the economics just don't pencil out. So there has to be a wild card. I just don't see it. Now, unlike, say, the bailout of the manufacturing of automobiles, it's a different ballgame. It's not like you don't need to do that. I mean, look at Tesla. They're dominant in the category, but where's the growth going to come from as everyone else catches up? So, automotive's a whole different ballgame than chips. So I think when the government puts their finger into the pie, there's implications. We have to watch that. My personal opinion is I think they need to ramp up at least presence. I do agree with Foundry. If it's a sinking hole of money with no end game, get that out of the way and focus on where the chips are going to be. So I think that's my take on it. I mean, so, we'll see. Intel stock pops immediately on the news. I'm not sure the market truly understands the implications. So I think, Wright's law is not well understood like Moore's law. So I think that's a really good call out that you've been kind of banging that drum. for years. So, and most recently, just highlighting it as a premise for the economics. So that's key. And then the rest of it is, where's the puck going to be if NVIDIA and TSM and others are skating with the puck, right? You know, the old adage, skate to where the puck's going to be. That's Intel's only chance, is to get lucky or be smart and get it right. And that's a narrow road with a little margin of error. They have to be at the right place, the right time in a future state. And with all the baggage, it's very difficult, high degree of difficulty. Meanwhile, TSM is skating with the puck. So you don't know where it's going to go. So I think there's so much risk involved. And that's just on the semiconductor side. You know, the other top news, Dave, is on the OpenAI ChatGPT 5.
Before you go there, I just want to say something about what you just said. I think you're absolutely right, especially your point about. I'm inferring from what you said is government running Intel or owning Intel could really screw it up, and so that is something that we really have to take into account. And so what we've proposed is a structure where the U.S. taxpayers, which have already committed money through the CHIPS Act, get a controlling interest. By the way, we've revised our bold plan. So now the plan is that U.S. has 51%, U.S. taxpayers have 51% ownership. And then TSM, we dialed down TSM's ownership. And then remember, what we also did is instead of having the big hyperscalers and Meta and NVIDIA on the cap table, we've basically gotten them in a headlock. It's a Trump headlock to force them to basically commit wafer volumes. Now, why would they do that? Well, they do that for two reasons. One is they're already spending hundreds of billions of dollars on AI. So I don't understand, John, why the government and the Trump administration and somebody as smart as David Sachs hasn't connected the dots to Intel's foundry and the need for advanced manufacturing. Like, carve out some of that Apple money that they just committed another $100 billion, take 5 of it and put it into Intel and commit to wafer volumes over the next 7 to 10 years and force them to do that. Trump's forcing companies to do anything that he wants. So why wouldn't he put some pressure on these companies to do the same here and put up some of that cash, take some of that cash, carve it out and put it toward this effort? And I think keep them off the cap table. We could argue about that and maybe put them on the cap table, but keep the cap table simple. Cap table should be the U.S. government, U.S. taxpayers, TSM, because you need TSM IP. That's something else that nobody talked about today on TV. Without TSM IP, it's going to take probably 20, maybe 30 years to catch up. And I'll explain, if you're interested, why TSM would even do this. And I think, the third thing is, the third player there, give Intel a little lick off the cone. I can't tell you how many times I've said the Intel fabs or foundry as it exists today has a negative value, just like IBM's microelectronics facility when they paid Global Foundries to take it. It's the same thing here with Intel. And every day that goes by, it becomes less and less valuable. And I think the Intel board has its head up its ass and is thinking, oh, well, we don't want to do this because our shareholders will really be pissed off and there's some real value there what we want to get. The value will come from the little piece of the American foundry. By the way, the Foundry of America, the name that I came up with last year that the former Intel board members stole when they did their Fortune article. But they get the little piece off their ownership there. But the more important thing is the Intel Products Group will be unshackled from this albatross that is foundry that, forced Intel to lose $18 billion last year. Get rid of that. That's your upside. And that will begin the turnaround of Intel. And frankly, I don't think it's going to happen without spinning out foundry.
They stole your name. They stole your name, didn't they?
I came up with that. I saw it in Fortune like 9 months later. I was like, wow, that's interesting. So anyway.
They're always stealing our
I know my piece got circulated around to Intel and board
I think
members
your
former
proposal was the straw man specifics that's driving all this. So props to you, Dave, on that.
I know that for a fact.
Yeah.
I know people who have, I didn't have personally have contacts there. I had contacts who had contacts, and they said they put it in front of them, and it's being reviewed.
Yeah, I know you helped shape journals, articles too. They everyone else. You mentioned Apple, just to kind of not to go on a side tangent here, but like that's a Barney deal, by the way, too. Like Apple's $100 billion deal. They're
For
building
glass?
they're building the glass. Okay, so
What's
that's
more
easy to
important,
do.
glass or semiconductors? I mean, come on.
Okay, there'll be jobs. Okay, I'm not down on the Apple deal. That was Tim Cook essentially kissing the ring, but he's not a big Trump fan either. But he's just like, oh yeah, rah rah. Trump gets the win. Okay, in the public's eye. But the fact of the matter is that Apple deal is actually beautiful for America. You can build state-of-the-art specialized manufacturing for the glass. We all know our iPhones and tablets, the glass. You click on it. Very specialty. Could be made in America. It might cost a little bit more, but there'll be jobs created. It's not a strategic technical piece. You can manufacture that in the United States. Apple will stock it up with special equipment. We'll train everybody. It'll help the people in America, but it's not going to move the needle on Apple manufacturing because they're going to ship the glass. Guess where they're going to ship the glass to? China. Right? So go make the iPhone. So like the complex manufacturing of the electronics isn't happening in America. And nobody's talking about that. So, they think, oh, Apple's back in the US. No, well, they never left. They're in Cupertino here in Silicon Valley. But that piece of manufacturing is good, but it ain't what people are saying it is. They're conflating that, oh, Apple's moving everything back to the United States. That is just not true. Okay, and if it was true, they would have done it. And the reason why they don't do it is one, the labor's not up to speed. TSM can't even get their factories up in Arizona because Americans aren't as strong production workers as in Taiwan. And three, they don't have any chips. Right? So, okay, so to your point about Intel, so all this comes full circle. So, great analysis. Again, this is what I was saying. The implications are not only around the Trump, roller coaster or, seesawing back and forth from you should be fired one day and then you're a genius, the next stock's up 7% before the market even opened. It was up again today. It's a joke, right? So we're going to see that. What it means is, what's the implication of government with the semis? That's the thing that's going to be the issue because you got tariffs hanging out there. You got kind of one-off tariffs here, there, the other thing. So it could turn into a genius move or a shit show. Right now, people are kind of waffling on which side that's going to be. It's just complicated. And
just one more point on that before we go on. The stock's up 7% since this was sort of leaked or announced or rumored. Bloomberg broke the story, then Wall Street Journal picked it up. Things up 12% in the last couple of days. I mean, if you can make money, I guess, playing the vol in Intel and selling, but if you want to buy and hold, you're gonna be holding for a long time, in my opinion. Now, we don't give investment advice, but Intel has got a long, long, long way to go.
I mean, there's so much arbitrage going on around it. I mean, people that do know what's going on are arbitraging the hell out of it. So, on the other top story before we move into some of the enterprises, OpenAI, which we were cheerleading around the ChatGPT 5, had the stumble. That kind of came out after the fact. They rolled back and had to restore 4.0. So, rivals like Grok stepped in, Grok 4 with free access. And it brings up the challenge of rolling out these new language models, Dave, and the importance of reliability. So, this ain't just like, hey, upgrade, agile, ship fast. There are system impacts. So the big takeaway from the OpenAI ChatGPT 5 stumble is the fact that, first of all, I liked it. It was performed great for me. I had no problems with it, but apparently there was some problems, right? So, but this brings up the kind of the DevOps kind of concept of, how do you roll out these new large language models? I think last podcast we talked about the scope and cost of making them. So this is like a point upgrade, right? So this is, as they say in software, point release. And the pressure and competition, they're all kind of doing the same thing now. You have some different derivatives of each one versus the other. Google's got their twist with Gemini, Anthropic with Claude, OpenAI. So you got everyone's kind of doing the same thing. And my belief is that these language models were not built, which I think we riffed hard on last time. They're not built for intelligence. They're built for with the transformer technology. They're built for language stuff. And so I think we might start to see the cracks into the foundation of where this scales. So if that's true, you're going to have the language models with transformers doing all that reasoning, but the real reasoning, the advanced reasoning, will come from new process. And that's what all the nerds are talking about in all these new white papers coming out. Is like it might be a whole nother discipline. So I think ChatGPT 5 points to that, and we'll see how this changes across other firms. How is Amazon, for instance, handling is it a back end challenge? Is it a front end challenge? It's an interesting conversation.
I think, I agree with you, John. I've been using uh, GPT-5 a lot. I used it a lot last weekend. I've used it a lot this week. Yeah, it is a little, laggy, uh, but I think there's more positives than negatives there. I know they had to come up, reinstate '04, but I liked the way that it shows which model to use. I thought that was good. I think that you asking a user 4.1, 4.0, 3, I mean, that's, deep research. It's like, huh? Most users aren't going to be able to figure that out, or at least want to be able to figure that out, match it. So I like that the system's doing that itself. Number one. Number two is I do think that OpenAI, they're a product company, and they have really good products, and so they'll figure it out. They put it out there. It's not, maybe it's got some warts on it, but they'll smooth those out, in my opinion. And then I also think that they've done a better job on the coding side. And now I don't code, but I know a lot of people do, and I've talked to them, and they've said it's actually pretty good. It's much better than it used to be, and I can feed my GPT-4 code in; it'll fix it very quickly. And so, that's Anthropic's and Cursor's wheelhouse, and so they're kind of expanding into new territory. I see it as a TAM expansion. So I think the negative backlash on GPT-5 was, I think, premature. I think it's going to, sort itself out, especially as they get more compute capacity, because they're very constrained right now.
Well, that was my point. My point was it's not so much the model itself; it's the ability to roll out these models seamlessly.
Yep.
And that's
Right.
and that could be why OpenAI is decoupling from Microsoft. So, again, there's things I don't know. I'm investigating this right now, but if you look at AWS and Anthropic, they're tightly integrating that into their custom silicon. You got NVIDIA with the CUDA. You're starting to see software, hardware integrations. Obviously, we've been pointing this out. It's not new to us, but the success of AI is really digging into the firmware, not firmware, the hardware, the semis itself, tying the software as close to the hardware as possible. Again, back like we always say in the 90s, we always had that memory management, processor, and storage relationship to the network. The same thing is true here. So I'm curious if OpenAI is having those growing pains. And as anyone knows in the online business, if you're down, you don't have reliability, you're screwed, right? So, it's a warning sign. I'm not saying that's going to happen. I'm just watching it because this is going to be a very competitive marketplace at the top of the power law of the models, whether it's language models or foundation models and pioneer models. So we'll see. Again, it's up in the air, and we'll be tracking it. Certainly, it'll impact the data layers and all the under the hood details.
I would add one more thing. I think it was the All In guys last week. Was it them or somebody else? I don't know. Made a big deal about how this is the first time that OpenAI releasing a new model hasn't, been catapulted to the top of all the benchmarks. Okay, fine. And maybe that's a sign of a flattening curve. We'll see. I think it's more to your point, more capacity constraints. But the point I want to make is that the economics of the LLM business are so brutal. It's because you have months before somebody catches up to you. So my point is, the real value in this space is going to be up leveled. It's going to be the agents that are on top of that and what they do. And of course, as you well know, I mean, we feel very strongly that the enterprise agents are going to be kind of the true holy grail. We call it enterprise AGI. That's where, the long tail is going to exist. The power law of Gen AI, that's where, trillions of dollars in increased productivity are going to come from. And that's going to take, I've said for years, the last couple of years, it's going to take the better part of a decade for that to play out, this whole agentic era. And people say, oh, no, it's coming next year. It's like, okay,
I kind of disagree with you on that. I think it's faster.
Yeah, well, the reason I feel that way is because it's a data problem, and it's not just a data gravity problem, it's a process gravity problem. In other words,
but the enterprise loves process. They have process. I think the caveat. Yes. I think the caveat.
Whoa. They love process, but they don't have their processes in a knowledge graph. They don't have their processes consolidated. The same problem you have with data silos, you're going to have with process silos. You have to have access to the data and the process.
Yeah, but
knowledge and all the
I don't think
process
that's a
logic.
10-year problem though, because that's not, unlike databases, you have technology software that can create abstractions around those silos, because it's not necessarily hard coded like a database silo. So I think there's a little different, but I think the nuance is true enterprise agents, okay? Intelligence, the way we fantasize about it, hey, my agent's going to call your agent. That could be a 10-year horizon, but the bottom line today, there's already agent stuff going on there because the processes are well known, they're well documented, they might be a little bit siloed, they might not be knowledge graphs, but the databases are independent of that. So I think you're going to start, you're already seeing wins with agents now, and MCP has kind of hit the scene. That's going to be the tell sign. If that adopts faster and accelerates in the second half of the year, I think the agent infrastructure is going to be the key thing to watch because that'll determine it. If you look at OpenAI on the consumer side, there's no real consumer apps in AI. It's essentially ChatGPT and the tools that people use, and now you're starting to see new apps get transformed into AI apps like taking notes down, call reports, call centers. Those are low-hanging fruit use cases, but they're not like the classic consumer apps. Now, that being said, the enterprise is moving fast on AI, and that's where the opportunity is, but that is more prime time from a spend standpoint and new ventures because there's more opportunity. Then you say, okay, full circle, true consumer apps will come out after this starts getting down because you now have an integrated work, play environment, and that's where I think is different than the old SaaS generation, the PC generation, the web generation, where you have an operating system, you put an app out there, it gets traction, whether it's Lotus 123 or Windows with Microsoft, then it becomes SaaS on the cloud. I think the enterprise plays much more of a factor into the consumer experience than ever before. So, I think there's no real classic consumer market today, except for the LLMs that we're using, right? So you'll start to see then enterprise kick in, and then the wave. So that's to me where agents are going to be revealing the timetable. But I think it's in the 5-year window. I think.
Let me clarify. Let me clarify what I mean by that. So you definitely going to have agents before 10 years. You have them today. But the agent, what I'm talking about is agentic workflows where the system actually determines the right workflow. And the processes are dynamic and they're like Lego blocks that you can put together on the fly. My point being, the agentic today is essentially what I call paving the cow paths, taking an existing process and saying, okay, we're going to make this better. We're going to make this more efficient. We're going to allow you to do this 20, 30% faster. I'm talking about something different. I'm talking about, a 10x improvement in process and productivity for 1/10 the cost kind of thing. Really dramatic transformational changes in the economics of doing business. Today, agents are like RPA on steroids. It's like RPA with, using transformers and natural language processing. And again, that's why I call it just basically doing what you used to do better, applying existing or agents to existing workflows.
Yeah.
That's why I think it's going to take a better part of a decade because to your point, this whole SaaS business is going to get upended. And you're going to see AI native startups come out with AI native workflows that don't have all that process debt, I'll call it.
I'm not making any sense to me.
And that's going to take the better part of a decade to play out. Well, it's true. When you think about what agents are doing today, you're basically taking an existing process and you're saying, kind of automate it.
All right, we'll debate this. We'll mark the time and date. I disagree with you. I think it's going to be 5 years.
Well, we're already
maybe
3 years in, John. Already
not,
3
not
years
with
in.
Agents, not with agents. Agents just like
Okay.
not even out there. I mean,
all right, we're a year and a half in agentic.
2035, in 2035,
about,
you're going to see agents. I'm saying 5 years from now, we'll see more agents.
Oh, no. I'm saying, okay, so I first wrote about, George and I first wrote about agentic, I don't know, a year and a half ago. Okay, so we're a year and a half in, let's call it. And then 6 months later, the agent craze started. So
agent hype.
When I say a better part of a decade, say a better part of a decade, I'm saying it's going to take more than 5 years for this vision of agentic AI to be realized and actually have the economic impact that everybody expects.
Yeah,
that's my call.
Okay, we'll see. We'll keep track of it. We'll keep a little scoreboard.
Yeah.
And
Well, was that plus, OpenAI
we'll look
won't
for
be able
markers. I mean,
to,
we'll look for some markers in the industry. Speaking
so
of
there's that
enterprise,
one, and then there's that one, and there's also the breaking analysis we did with Sarbjeet, you and I and
yeah,
Sarbjeet, on that OpenAI wouldn't be able to maintain its first mover advantage. You were on the positive side of that, saying, "Oh, they will,"
yeah,
and we were saying they won't. So far, you've been right.
yeah.
We'll see.
I'm right again. We'll make sure we'll track that so we can just document the
Yeah,
historical.
you're right again. You're right again. Trump never loses. You're winning again.
Some stuff is so obvious. Okay, since you brought up the enterprise, let's move into the segment around enterprise and the deep dive and around AI, because this is a great segue. If you look at the earnings this week, kind of a mixed bag. On the good news, Cisco had decent deals with AI infrastructure deals. The bad news, Cisco just got downgraded today by firm, and they got crushed, down 2%. So HSBC just said, put a hold on Cisco, which is essentially a major downgrade, right? So that's the problem.
Cisco had a good quarter. They had a really strong
They had a good quarter, but then that's good news yesterday. Today it's bad news. Other bad news, I mentioned Applied Materials, downbeat on their forecast, but still reiterating that their long view is unchanged, meaning positive. CoreWeave had decent numbers. But the IPO lockup periods all is expiring, right? So you
sell.
So you have everyone dumping because the stock's up, right? So chaos on that front. And then obviously, I don't know if you saw this, but C3 AI is totally plummeted.
Yeah,
and so, Tom Siebel announced he had health issues leaving the company. They were a real pioneer in AI early on with IoT, huge customer of AWS. We've been tracking them on theCUBE for a long time. That's a signal. And then you got Palo Alto, Workday, and Zoom next week coming out. So, and like I mentioned earlier at the top of the podcast, Dave, the IPOs aren't AI companies. So, I'm not contradicting myself on the ages, but I think the AI payday is not yet realized, or will be realized maybe until next year. So if you look at the earnings in the enterprise, the big hyperscalers, the Fab 7, everyone's doubling down on that. They had good numbers. The rich get richer in AI. We've been saying that, and I think that's to be true. But, these IPOs, Figma's not an AI company, okay? They can do AI, but they're not an AI company. They'll use AI to make the product better, but they're not realizing any gains. That popped. And the crypto. And then all the other IPOs are not tech companies per se, or if they're tech companies, they're not AI companies. So I think there's going to be some great IPOs coming in, some enterprise companies that are waiting to go out, but they won't be AI companies. And that's the complaint on Cisco, by the way, that they're not an AI company. And so, I'll have a conversation with G2 Patel over there, who's now was chief of products, now he's the president. He is all over AI-fying Cisco. So the question is how that will play out. So I think we're in a pre-AI harvest. There's not harvesting coming.
You called it. Like AI needs a super cloud, right? AI needs super cloud. You said that, I don't know, 2 years ago, 3 years ago. Well, super clouds need networking. So they are an AI company. I mean, if you're a networking company and you're a leader, I mean, Arista is an AI company for sure. But let me ask you a question. We both believe that AI is real. It's going to have major productivity impacts, right? We believe that. Do you believe that we're not going to go through, what does Gartner call it, the trough of disillusionment? That we're not going to see some significant backlash before we realize the results of what we think is going to be huge? People always say we overestimate at the beginning, we underestimate the ultimate impact. Do you not think that the stock market is going to have a major disappointment and pullback at some point because the AI is not paying back? It's almost guaranteed. It's impossible to tell when, but it's going to happen. That people are going to say, "Wow, geez, we're just not getting the payback here." Dial down all the inflated valuations. They'll get crushed. Then, if the smart money will come in, and then 10 years later, you make a lot of money.
What's the question?
Don't you not believe that that's going to happen? That we're going to, sorry.
No, here's my take on it. Here's my take.
A wall before we realize all this wonderful benefit, that we're just going to sail right in smoothly, soft, like easy takeoff. It's like, soft landing. Will rocket ship rise with no disruption? Here's my take.
That? I do believe we're going to have a continued uninterrupted prosperity if you look at the stock market and you take out the Liberation Day nonsense, it's still tracking, right? So it's not down. And I think that if you're going to have the argument or not, or the proposition that there's irrational exuberance on the market, or froth in the sense of bubble behavior. I mean, Gardner's trough of disillusionment basically is around the hype cycle. So yes, there's hype. Now what's different about AI is not a category per se where that's an AI company. If everybody's an AI company, then inherently everybody wins. This is why I'm watching the IPO market carefully and the startups that are coming out. There's very few pure AI companies, okay? And that's why everyone's putting money into research. So what I see happening is the democratization of the technology as a horizontal enabler, right? So what that means is, that means other people will benefit. That's why we're seeing these companies that are, quote, not AI companies go public. There's definitely AI in crypto, but they're not AI companies. Now, I overheard some CNBC folks and some other traders this week on the floor at the NYSE talking about small cap market, and that everyone's relying on the Fab 7, the big whales. Dominates the option market that we overlook with our studio in the NYSE, and with on the trade side, they dominate the market. So and today on CNBC, I saw them actually put this into a segment where they were talking about the small cap markets. And then I saw Duncan Davidson from from Bullpen Capital came on, did a great segment talking about this is healthy because there's demand for stocks. There's not enough supply of stocks on the market. So what's happening in the general world is that there's demand for stocks rather than everyone competing for the 7. And secondly, those companies are going to be getting gains from the AI. That's not going to be like, hey, I popped my stock. They just get better fundamentally. So I think what's happening that I'm watching is that there is going to be kind of like a fertilizer of AI that's going to grow value, and that's going to come down to business execution and fundamental advantages for the companies. If that's true, the stock market will pop because more supply will come in. And that's why if you look at the volume, it's basically the top tech companies move most of the market. And we've been covering this for a long time. So that's why the enterprise side is so critical on this, in my opinion. And that's why your point in our debate about the agents being kind of the general intelligence layer, the AGI debate kind of goes to the enterprise. That's what you're basically saying about agents. Will this agentic error or of AGI come to the enterprise, which is basically agents working on our behalf? So that's, to me, kind of very long-winded way of saying AI isn't like the 3 companies. Right? They're already winning, the big companies with AI. It's AWS, it's Microsoft, it's NVIDIA, it's even Oracle, I would say, put them on the list. They're all winning because they're, one, making gains. Look at CoreWeave. I mean, they're losing more money, but they're arms dealer with AI. So yeah, you got those big whales, but I think it's going to be spread down across. And our specialty model on the power law speaks to that on the model side. So I think the stock market's going to see some wins from companies that are using AI to transform their business fundamentally, and that's just going to turn into better business performance, hence the ability to go public and make more cash.
I agree with all that. I just think before that nirvana that you just laid out happens, there's going to be some pain.
I think there's going to be a massive digestive track, of the system where stuff just doesn't make it and it gets pushed out, right? It's going to die, right? It's going to move on and be the next venture. But I think there'll be successes from the enablement standpoint, for sure. Now, in any bubble, it pops. In this case, I'm not sure it pops as hard as the .com bubble because there's enough wins that it's just more you let the air out slower. So I think that's going to be my take, is that if you look at it, there's enough wins around. When the .com bubble burst, what was the wins? It was essentially people who put up websites. They weren't going public, and it was all the search engines. And then all the fake stuff, that pets.com, just the market wasn't ready for it. But it ended up happening. We still buy everything online. I just made golf reservations for the weekend, and I'm just all doing it on the web. Well, all that stuff was promised to be a business. Like, oh yeah, pets.com, that's not a category creating business. That's just e-commerce,
Yeah, so we all remember that well, but I mean, are you saying that it won't be, I don't think it's going to be a repeat of the .com, because I think there was naivete in the market and, like you said, irrational exuberance, but there was a pattern. We certainly saw this with the PC rise. There was a great softness prior to the productivity boom of the 1990s. You saw when you transitioned from mainframes and minis to PCs, the economics were different and the volume hadn't kicked in yet. And so you saw, the IT spending market got hit and a lot of the tech stocks back then got hit. Okay, so you certainly saw that. You definitely saw it in the .com. You saw
well, Dave, the issue about
let me
the
finish. So you saw a little bit of a backlash in social media. When people were just concerned about safety and everything else, and so I'm predicting that you're going to see some kind of similar, not identical, but some kind of similar disaffection with, wow, we've been spending all this money on AI. Basically it's a one-trick pony right now, i.e. called hyperscaler CapEx. And at some point when we transition to that broader market, there's not going to be enough new volume and the prices are going to tank and the ROI is not going to be as obvious. The prices to deploy all this stuff. And
I think the prices will go down and it'll be good. That's good. The more prices, the electricity will dominate everything.
Yes, but the economics will shift. In other words, the prices will come down to do stuff. But the volume is not going to be there. And you're going to see a massive disruption with new companies disrupting the old companies, or the old companies trying to change their business models, trying to preserve their margins. And the stock market's going to say, uh-oh, there's a problem here. Either earnings aren't there, or we're seeing a disruption in the market where their moats are disintegrating. And that's when you'll see a little pause. And then once that happens, it could be a big pause. And then once that happens, I think the market will accelerate. And I can't tell you when that's going to happen.
Well, I think if you zoom out on your analysis there, I'll just say this. In the .com bubble, pets.com, food delivery, with that firm that went under, I forget their name, they were all going to be the next big thing. Now, Yahoo was a search engine, that was a utility everyone loved, but people were putting up websites. But what ended up happening was how people used the internet as a disruptive enabler for their life, finding things, that's a search engine, finding what you're looking for, buying stuff, that's e-commerce, right? That's every category. So you're buying food, you're making golf reservations, and then finally analyzing data. Can I find what I'm looking for? Where's that book I want to buy? Or hey, I want to research something. So access to data and consuming it that way, I'll change it. AI is doing the same thing right now. It's like, it's changing how we interact with those, categorical, it's how we buy things. Hey, I got a problem, I'll just ask ChatGPT. I had a friend who's like trying to return something to a company. They have this Byzantine return policy, went to ChatGPT and said, how do I return this item to Home Depot? And it's just like, gave them the exact steps. If I was going to try to do that on the web, I'd be like, okay, they make it hard to return stuff. That's the business model. They laid it all out, and it was just beautiful. And that is a different experience than an app or a web or a chatbot. So again, that's where AI goes. Now, to your point about economics, the lower cost to provide the horsepower and the electricity will essentially drive the more enablement for more compute. So I think that's going to benefit the apps, the verticals, and so that's where the value will be. It's not going to be one or three. It's not going to be, here's the new batch of 10 to 100 companies that are making AI a reality. I think it's everybody. That's my take.
Okay, so I'm not sure you disagree because you keep bringing up the pets.com example.
No, I agree with you on that piece. I'm illustrating the fact that people get caught on the stock market, like what's the next Facebook? I mean, Facebook essentially was a unicorn or a black swan event, and they just had such an advantage at scale, and it took them to break democracy before people figured out how dangerous this is or how good it is, depending on how you look at it. And they're still cranking out the cash, right? Just like Google did, right? So you have and same with Amazon. So that was but outside of that, what other social networks do you have? Essentially, you got LinkedIn, but it's not like you name 100 of them. They're called apps. Right? There's not companies of that size. Again, that's the power law. And again, that's where the feeding frenzy now is on the VCs. They're trying to chase these Series B and C startups because they're hoping for that next unicorn. And that's why the Figma thing was so huge for me, because that was essentially pays back the funds like multiple X, 17X. So it takes one hit to win. And that's why it's the innovation right now and the money being thrown at people. I mean, just look at the funding rounds. Look at Rob Host's list. $57 million series, a seed round. $9.8 billion valuation. I interviewed Alchemy, the founder, great guy, Nikhil, and his company. They're from Stanford. They've raised, they're a $10 billion valuation powering all the chains. they're categorically, that's a go big or go home business. And that's funded that way. Cohere got another funding round at 6 billion, close to 7 billion. NVIDIA's backing them. I don't know if you saw that round.
I did see that, and I like Cohere. I like their strategy because it fits the long tail and the domain expertise that we talk about all the time, and that's what Cohere is right there. They're doing stuff with Dell. They're doing stuff with Oracle in particular. I think they power the Oracle cloud with their LLMs, and Oracle's all about the enterprise. So I like Cohere.
All right, well, let's wrap up the pod by just kind of riffing on your take on the crypto Trailblazers. What did you think about that? That was pretty compelling. Another successful set of leaders came in, and it was a bonus that Bullish went public on the second day. It was really perfect timing for what we were doing. So what's your takeaway on crypto right now?
Well, I think it perfectly sort of underscored the moment that we're in. And I think that for the next several years, there's going to be there's going to be a low friction environment, which is going to mean a couple things. One is good news for crypto companies. I'd say two, we're going to see a massive change and shift in how finance is done. A lot of this is going to be done under the covers, of course, but some of it, quite a bit of it actually, is going to be visible, where you've got low friction, lower fees, a lot more products that you can, that are going to be tokenized that people can share and trade, virtually instantaneous, transaction completions, and a lot more facile movement of money and other products that get tokenized. I think we're just entering now a new wave. I don't know, it's probably like the third wave. I'd have to think about it to identify those waves. Early on was like, crypto underground and Silk Road, and then it became the crypto innovation era where it was ICOs and there's a lot of scams going on, but a lot of money raised and a lot of innovation. And now the third era here is that it's getting operationalized, and the first industry really is going to be Fintech. So the killer app for crypto has always been money. Yeah. And so now it's just going to be transforming the financial services industry. Everybody's in. I mean, the entire institutional banking community is leaning in, and those who don't are going to be left behind.
Yeah, I mean, my reading in between the lines from all the interviews this week was, one, it's definitely mainstreaming crypto. It's happening fast. And you mentioned money. The people who have the money now are the people who are doing these deals. You talk to Andrew Keys, you talk with the folks from CZ's group at Binance, Easy Labs, Ella Zhang there, Antoine Katz from Talos, Sergey from Chainlink we talked to. They've all made money. They're all crypto millionaires. So you got ledger guys, billionaires, right? So these folks, I talked with a great Diago Monaco, co-founder of Anchorage, and executive chairman. He's general partner of Han Ventures, and they're investing up and down the round sizes, okay, and in crypto or in fiat, and so they have money. So these are not like VCs, like, hey, I went to business school and I learned how to, the SWOT analysis, and this is a good deal. These are people who have been there in the generations of crypto. We've been covering crypto since 2011. We know the people that we were hanging out with around 2014 to 2018 on our coverage. They all were buying Ethereum when it was like $1. Or were part of the founding team, or buying Bitcoin when it was $20, right? So, when you stockpile some of that crypto, you become a billionaire. And what's happening now with Ethereum in the financial markets, as the financial markets see the money flow, it's like hot money flowing around, you're seeing the financial systems have to meet the demand of the consumer, which is, there's a retail market for crypto. So digital currency, digital life will need some stability, and that's where stable coins and the genies, like we talked about on our last week's pod, really enable and have moved the needle. So I'm expecting Fidelity, JP Morgan, everyone having their own stable coin. It's a great mechanism, and then what's going to follow after is the regulatory. That means the plumbing of money, the system will be changed quickly. And the people driving the change are the ones who have been there from the beginning or active and have made money and have money and deploying capital. And then they're not just funding ICOs, they're funding ventures, right? So this is entrepreneurial. So it's not just arbitrage, make some token economics, get a token, liquidate it. There's a longer game view happening. And that's my takeaway from this week, is that these leaders coming in are building out and creating a wealth creation formula, an algorithm. So, when you create value, you extract it, a simple formula. And, the Darwinism of Wall Street, as we say, will bring the wrecking ball in. I mean, I was looking at the market today. Salesforce is now, shares being acquired by Starboard, the activist. Why? Because they think Salesforce was too rich of a stock and they might get crushed. That's the first time I've seen anyone say that publicly.
Wait, so why would they be, why would an active, if they think it's too rich, why would they be acquiring shares?
Well, the stock's priced really high right now, but so they want to see them make more money, otherwise the stock's going to crumble, right? So, they're taking a position and they're trying to buy more, right? To get a position, they're activist, right? So
yeah, but the activist usually says this stock's undervalued. If we break it up or restructure or cut costs, it's going to go up.
Well, yeah, or you pull the old, remember back in the 80s, let's break up Salesforce, right? They have a lot of assets. So where's their cash coming from? So I'm not saying that's what they're saying. I'm saying that's what I would look at as say, it might be undervalued today unless you broke it up. I mean, obviously, you're right. No one buys stock that's going to go down if they think it's worth more. They think management's not doing the job or they're not positioned well enough for AI. That's kind of like how you read that. It just happened like just this morning. So, I think no one really knows why, but my takeaway on that, my hot take is...
Wasn't Elliott was in on Salesforce. Elliott came into Salesforce and Benioff smartly, instead of, writing a letter to a shareholder saying, we're doing great. He said, hey, come on in, Elliott, let's talk. And Elliott said, hey, we think you should do this, 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 and this. And Benioff said, I think those are good ideas. And he did them. and then Elliott, the stock went up. I think Elliott sold and then they left. But now new activists are coming in. I didn't realize that.
No, they already had a stake. They increased their stake already. And they added, let me see what they said here.
Who's the
Starboard Value. So they're...
How much do they own? How much do they own? Do you know?
3 years ago, they pushed for big changes at the company. Let me see what they say here. Salesforce stock has dropped nearly 27% since January.
Yeah, there you go.
It's their dip.
Well, that's why. That makes sense. So the stock's down, but the stock's down on sympathy. I mean, it's certainly earnings related. The stock's down on sympathy with other SaaS companies that are out of favor right now. And Benioff's retooling the company and doesn't help the stock price when they go out and they say we're going to
they charge a lot for their product
on Informatica.
Some people say that AI can build their own Salesforce, right? So there's future where...
but then you saw, who was the company that your Silicon Valley buddies, it was all a buzz when they said, oh, we're going to replace all our SaaS and we're going to do everything. Klarna. And then what did they end up keeping? Their CRM. Their Salesforce, they couldn't get rid of it.
It's like Oracle. Amazon had Oracle for years. They couldn't get off Oracle. I mean,
they still have Oracle. I keep telling you that. They just don't divulge it. They got rid of some of their, data warehouses and they're running those on Redshift now, but their core transaction systems are still running on Oracle.
They have 1.2 million shares of Salesforce. So
they boosted it up.
Let's debate that another time, because I think there's a future where if you look at the product value and the cost people pay for Salesforce as a contact and CRM, is going to be challenged. And because it is sticky, doesn't mean it's the best. And what was sticky last generation might not be sticky this generation. So, so I put that out there. I still think that with AI and Salesforce, I've said this perfectly, that AI is good for Salesforce because it can stitch together abstraction layer to stitch together all those siloed entities. Remember, they bought a lot of companies, and that was their big complaint everyone had, including me, saying, interoperability from Salesforce app with Tableau, with Slack, with the cloud they bought, the data cloud. And so the opportunity with AI is to actually just make that invisible, still complex, but you can write software to do that. That makes Salesforce more powerful. And if I'm an activist, I say, Gordon Gekko, break it up. It's why? Because it's wreckable. You could wreck Salesforce and make more money and sell it in piece parts.
It's not a breakup story. What's happening is that Salesforce is a rule of 40 company, and these guys want them to be a rule of 50 company. They want Mark to cut costs so that it drops more to the bottom line, so the stock goes up so they can sell it.
Yeah.
But Benioff is basically saying, we're investing in the future. I like what Salesforce is doing because, to your point, I think Salesforce rightly was criticized for having all these piece parts. But Benioff invested in R&D and has been. He still got a ways to go to create all the stuff that George Gilbert has been researching the harmonization layer, their data cloud, their whole system of intelligence, their system of action layer, their system of agency, their whole BI layer with Tableau. They're building a platform. And they really, frankly, were never, to your point, a platform company. But if Salesforce can become a platform company, they can become, in our view, the next hyperscaler, but a software-only hyperscaler, and they'll have better margins than Amazon.
Yeah, they love that term. Just for the record, I'm not saying it's a breakup story, but I'm saying I could see that narrative. Not so I agree with it.
I see what you're saying, because they have the parts. They could split them up. And
it's the Gordon Gekko approach, Wall Street, break it up. Sell the hangers, kind of thing.
Right.
All right, Dave, Crypto Trailblazers Week. It's great to see the IPO in New York. Good to see you. I'm in Silicon Valley this week. It's going to be a very awesome second half. The AI drama, government influence, crypto continues to party. We'll see how AI shakes out, and we'll watch the debate of when agents will hit the scene. Day one is today. We'll see.
No, it's not when agents are hit the scene. It's when this agentic enterprise.
Now you're revising history.
Okay, I'm not revising it. Agents are already here. We know agency here.
All right. See you next time.
All right. Hey, we'll see you later, John.